Good morning, traders. It is Monday. It is May the 22nd, 2023. Let's get into our weekly market analyses and take a look at our past week's performance results. Let's jump in and take a look at the markets first. There's a couple of interesting things happening recently in the marketplace that I think bear making note of. We look at the weekly technical analyses matrix that we use. We have about 12 different technical indicators that we use here, along with dual overlays, both simple and exponential moving averages, all the way from 5 out to 200-day moving averages. We look at pivot points just based on primarily Fibonacci's, but we utilize a lot of this information to sort of get a broad overview. This is, again, a weekly picture, and pretty much across the board, we're seeing a couple things. Obviously, it's a very bullish trend right now. We're in a strong buy mode, and a lot of these indicators are implying that they're a little overstretched, that they're a little overbought. I'm going to show you a couple of examples here in just a second of where I see this myself, and really start to wonder how much strength we're going to be able to have left in this bull market, although admittedly it's very bullish right now. We look at a couple of other things in terms of support resistance areas. This is pulling back on the E-mini futures contract on a daily basis, and you can see how critical this 4,200 level has been for us, just over and over and over. Again, we've been in a nice little bullish trend here as of late, but this 4,200 level, we've hit it on April 18th, we hit it on May 1st, we hit it again here just recently on May 19th, and actually tried to push up above that and started to retrace back down. So I think that's the first big question for us today, Monday, as we get started in our trading is, are we broaching here into a new trading range? You can see this new range right in here. Are we getting into this new trading range? Or are we going to retrace back into the trading range that we've been in? My goodness, going back to August of last year. Really, it seems like forever that we've been stuck in this trading range. So I do think that the next few days are going to be telling in terms of what the market can do with this E-mini 4,200 level. But for right now, it certainly looks bullish. It certainly looks like it's trying to establish that what was resistance level of 4,200 looks like it's trying to establish it into support. We'll see again if that can hold or maintain going forward. We pull down a little bit deeper or a little bit more finite, if you will, into our daily trading activity by looking at the 2-hour candles. And there's a couple of levels here that I'll just share with you that I think are important for us that we're looking at this week as we start our trading. Get a couple of these things out of the way here. As we look at the upside, of course, again, the 4,200 level is critical, but above that is 4,212. That's the first level above that we're looking at, and then 4,225 above that, 4,236 above that, and then 4,252, and that's a pretty substantive level for me, that 4,252 level. That's a big level. If the market were able to break above that and hold that level, I think that would absolutely establish us into a new higher trading range. If we look at the downside, well, obviously the 4,200 level here, obviously that is sort of the first key level. The market's got to get down below 4,200, but really on a technical basis, it's about 4,195 is the actual level, and then 4,185 down below that, 4,168 below that, and then 4,152. Those would be my levels, our intraday levels for today that I'm going to take a look at as we start our trading. We look at the key support resistance areas of all of the major indices that we trade. We do trade each and every one of these. We trade them with a little bit different strategies and setups, but we do trade all of them simultaneously. And again, you see the SPYs and the Qs just basically trending up. Really hard to not see the uptrend in the Qs. But it's interesting, above the 200-day moving average, they're solidly above the 200-day moving average. But it is interesting that the diamonds really have been trending down. The IWM really has been trending down. Not substantively here. The IWM has been really relatively flat since basically the first part of March of this year. And it's really, I guess you can say that the diamonds have been trending down here, but that's not much of a downtrend. But it really has been the marketplace trending down, with the SPYs, the S&P 500, doing fine, doing great. They're up about 9% year to date. That's kind of where you would assume that we might be based on the fact that last year we had a down market and we're getting a little bit of a rebound this year. That kind of makes sense, but it's the Qs that are just absolutely holding this market up and off to the races, and they continue to just power higher and higher and higher each day. How long will that last? Well, nobody knows, but it is interesting. And here's a couple of the things that I wanted to point out. Once again, you see that we have a really high preponderance of stocks that are still below their 50-day moving average, still below their 200-day moving average. This is not what you normally see in a marketplace that is A, very bullish, and B, trying to break out to new higher levels. It's just simply something that you don't see. And I think that what is telling behind all of this is if you do look at the equal weighted composite, as you guys know, that all of the indices are cap weighted. And so you have basically a half a dozen stocks that are running the show on these indices, specifically in the NASDAQ and the Qs. Very cap weighted. And so if you look at the equal weighted results, I think that people would be very interested to note that basically since, we had this massive rebound in January that took place, and then from January until now, really, we've had nothing but a down market. This market has been nothing but down. But you wouldn't know it looking at the indices, especially looking at the Qs. Because, of course, we've got about 5 stocks comprising 85% of that index, and those stocks have been on an absolute tear. One of those stocks happens to be NVIDIA, and I think that this is just telling of what is happening overall with the techs, with the NASDAQ. NVIDIA, obviously an AI darling stock. It is just absolutely primed to take advantage of AI. That's all wonderful. That's all great. That's fantastic. NVIDIA right now is trading at 29 times sales and 182 times earnings. Okay. I just recently looked at buying a company. They had it priced at 4.3 times earnings. We both, the seller and myself, agreed that that was probably a little bit overpriced and that probably a fair market value was 3.6 times earnings. We are looking at 182 times earnings here on NVIDIA. Now look, I get it. AI is going to probably be huge, and NVIDIA is definitely going to benefit from AI, but 182 times earnings. I have a neighbor that does some yard work for me from time to time. Says he makes about, he's a teenager, says he makes about $40,000 a year running his lawn business. 182 times 40K means he should be able to sell his lawn business for $7.3 million. I don't think that his lawn business has the potential that AI has, but I also don't think that those are the types of multiples that any of the stocks are going to ever be able to maintain consistently over time. So I do believe that we are due for a pullback here. I've been saying that for 3 weeks, 4 weeks, been wrong all of that time frame, but I do continue to believe that. And again, I see this discrepancy here. If you look at the IWM, if you look at the diamonds, they've essentially gone nowhere this year. This is these returns of 0.9%, 1%, 1.2.5%. It's essentially a rounding error at this point in the year. We're getting to the halfway point almost in the year. The SPY, again, up over 9%. That's a solid return, and it sort of makes sense if you look at, again, last year being a down year and we get a little bit of a rebound this year. I think that makes perfect sense. I don't think that we are going to finish out the year with the Qs up 75, 85%, which is what we're sort of annualizing out at right now. I do think at some point that any parabolic move in an index, maybe not necessarily in a stock. Stocks can go parabolically to the downside and go bankrupt. But when you're looking at an index, whether that parabolic move is up or down, it's just something that's not sustainable. And I do think that at some point here, we do get a retrace on the Qs. When? Nobody knows. Nobody knows. We look at last week's sector rotation in all of the different components or sectors of the marketplace. And again, it's probably not surprising that the safety zone of utilities got dumped for the hot zone right now, which is technology. Technology just continues to push here. When will it stop? I don't know, but I do think that it was nice to see some strength coming back into the financials again, starting to see a little bit of, not necessarily strength in the banking sector and the regionals per se, but a little bit of stability and IV coming down in those stocks. We hold a significant portion of our ATM program in those. So that's been beneficial for us to see that. But when will this stop? Can any sector, no matter what the potential of that sector is, go up 3.5% a week after week? It's just not sustainable, in my opinion. We look at last week, and again, it's not surprising when you look at a heat map of where the activity was. It was the techs. We got a little bit of a rebound in the financials, and that certainly helped buoy the marketplace. But everybody dumped the safety area of utilities and fled right back into the technology area. So they continue to push higher and higher. We look at the results from last week, and again, it was a solid week across the board for all of the indices, save for maybe the industrials, the diamonds. They haven't really done anything all year. That's been fantastic for our diamond setup ladder trades that we do. I'm assuming that that's going to change at some point. The diamonds are sitting on a fairly big cliff that, as I look at it technically, that I think could fall off of should the right situation or wrong situation, as the case may be, appear. But yeah, this is just, in my view, just simply not sustainable going forward. We look at the open interest, and again, you are seeing a put skew like no other. It is absolutely insane how big the skew right now is in regards to call options versus put options. The activity is on the put side. It's heavy on the put side. I don't know if that's, we don't know what that is, if that's hedging, or if that's speculation, or if that's dealers trying to balance their books. But I think it is telling that the skew right now to the put side is as big as it is. We look at the expected move for this week, and no difference than last week. And until we get a catalyst of some sort that moves this market either substantively back down into its current range or establishes a new range and starts to trend, I just don't think that this changes very much. We have some news catalysts this week. We have FOMC minutes being released on Wednesday, but I don't think that that's going to be very moving to the marketplace. I think that's already booked in, so to speak. So we have, again, another trying week in terms of trying to find what the expected move looks like versus what options are priced like, and seeing if that makes sense. These numbers this week are not substantively different from last week. In fact, in a couple of areas, they're actually worse. But for the week, we're looking at a 1.2% expected move in the SPX with an IV of 13. These are abysmal numbers in terms of being an option seller and trying to sell overpriced. The marketplace is pretty straightforward. You want to buy options or be a debit trader when they're underpriced. You want to sell options or be a credit trader when options are overpriced. I don't think anybody's saying that options are rich, that they're overpriced right now. This is the exact same situation that we had last week. And heavens knows we certainly had more if we look back at our results for the week. Heavens knows that we beat out that expected move last week by quite a lot percentage-wise. So will we be in the same situation this week? Well, we'll have to see. But again, it's not great odds for credit sellers here with regards to that. We look at the Fear Greed Index. It is a sentiment reading. It gives us a little bit of an idea. It's contrarian indicator. We want to be greedy when people are fearful. We want to be fearful when people are greedy. We just had a recent example with the banking stocks when everybody was fearful and thought every bank in the world was going bankrupt. There were a lot of nice bargains to have been picked up at those levels. Conversely, when everybody gets really greedy, it's probably time to start heading for the exits. We've been in this greed category for a really long time. You can go back over a month and we've been stuck in this area. So it's not just me. It's not just me that thinks that maybe we are a little too greedy here. Maybe we are a little too high here. Maybe we are due for a retracement. But unfortunately, the market doesn't listen to me. So it doesn't follow what I tell it to do. But we will see, I think, at some point, some type of a retracement. Again, this week, we've got some news catalysts, but nothing that I think really is going to spark this market. We've got some EBC and Fed speak going on today all throughout the morning. You never quite know what could be said there that could be viewed as a catalyst to move this market. Never know. Got home sales, a little bit more Fed speak, and then PMI numbers coming out on Tuesday. Oil inventory numbers are big for us on Wednesday because we do trade oil every single week in our trading room. The FOMC minutes get released. I don't know that that's going to be too big of a deal. Could be. You never know. Thursday, we have GDP numbers. Those might be big if they are substantively different than what the market thinks it's going to be. We've got nat gas numbers coming out. We've already booked our profit on our nat gas trade for this month. I don't believe that we'll be getting back into that this month. We'll be waiting for the next expiration. It was a nice solid trade for us. Wasn't the biggest nat gas win that we've ever had, but it was a solid one. So we'll see how that develops over the next 2 weeks until we get into a tighter expiration once again. We'll get back into our nat gas trades. PCE numbers come out on Friday, and along with durable goods, that might give us a little bit more indication on inflation as well. But I don't know that I see a lot of catalysts in there to really drive this market one way or another. I think it's going to be very technically oriented as we go. Our zero DTE results. Let's go through our results from last week. A little bit of a mixed bag last week. We're up to 104 days of opportunities in the zero DTE world. We've done 177 of those trades. I think that's one of our strengths, is that we have been able to double up on SPX and NDX trades quite a bit this year. So it's given us a lot more opportunities. We've had 171 winners with 4 losers, and we're currently in 2 rolled zero DTEs right now. We've got an SPX and an NDX trade that we are working right now. But overall, I have to say, with the low IV environment that we've been experiencing for several months now, that I'm pretty happy with our zero DTE results. We look at our 4 DTE trades, and we're up to 43 wins and 3 losses there. We've got 2 rolled versions of those as well. We only have about $90 of debit to make up on our rolled SPY trade, which we will reinitiate today. That one should be pretty easy, and we'll be working the put side of the Q trade that we have already rolled the call side on. So, been a week this week of lots of rolls. in our 0 DTE and our 40 DTE trades. IWM Millionaire Maker trade, we had another solid week with a win, but a small win. It was well below our average, but we took it off quite early as well. And I was a little worried, again, that we were mispriced, that we were underpriced option-wise in the market relative to the types of moves that we might have. We just booked a profit on it. We'll be back at it again here today to add a new one into the mix. Pairs trades, we added another pairs trade. So we've got a couple of those that are still open and working. Those have been pretty stress-free trades for us. I think that, everybody has their own approach to trading. And I'm certainly not here to tell people what to do with their money. But I really think that everybody owes it to themselves to look at having at least a small portion of their portfolio dedicated to pairs trades. I think the risk-reward ratio is fantastic, and the returns have been really good, and obviously the results, the consistency of the trades have been nice as well. No new bear market trades from last week. Our stock market millionaire maker trades. We had a lot of activity here this week, chasing both of our stock millionaire maker trades. Both the NDX. NDX came out with some very favorable news that pushed it way up. We had to work to adjust that trade. PayPal continued to drop after its recent earnings report. We had to chase that down. They both look fairly stable right now, knock on wood. We've had to adjust them. I think we're in a good adjustment zone here. Still haven't had to take a debit or a loss on any of those this year, knock on wood. It's been a really good trade for us. Positive Vega DIA ladders. Once again, we added another one of those. And once again, we ended up with a winner, full profit at the end of the week. This has been a fabulous trade for us. Again, this trade makes us look like absolute trading geniuses. It's really been just because the DIA has been flat all year. It's been pretty easy to trade, but you never quite know where the easy trades are going to come from. That's why we have all of these trades that we can pick and choose from. A new category that we're going to start working here, we are going to add in a portfolio margin section to our model portfolio, our daily trading account that we go to do our active trading in. And portfolio margin, we'll put out a video on that, and we'll talk a little bit about what portfolio margin offers, some of the pros and the cons. But this is an account that has been generating about $16,000 a month in income on about $300,000 of capital. So we have trades that you can do for $200. We have trades that you can do for one third of $1 million. It just is, there's something for everybody here. But we had a lot of clamoring for higher portfolio value opportunities. You guys know trading is very discriminatory. The more money you have, the more opportunities there are. And when you can get into portfolio margin, the opportunities are even greater. So we'll start rolling that out. I've got to get that $300,000 transferred from my other account into our model portfolio account. Those positions that are currently working to bring in $16,000 a month expire in about 8 days. So it'll probably be a couple weeks before we get that going, but I'm excited to bring that extra level of trading opportunity to the trading room. Scalping was basically a bust. Had a good day on Tuesday, up $860. Gave it all away plus some on Thursday, about a $1,200 loss. Just kind of how it goes sometimes with scalping, but we'll be back at it again this week. Dragonflies have not added our BA trade back in again. We may or may not do it this week. It might be the following week. We'll just have to see how premiums look this week. It's really all about premiums. Theta Fairy, that was a nice, pleasant surprise. Very, very tough week once again for premium. We didn't get all 5 days in. We only got, I think, 3 of the 5 trading day opportunities in, but all three were profitable. All three were winners. And we're up to 90 winners now with one loser. Such a great, great trade. We just booked a profit here. I'm looking at, it's about 6:30 a.m. Mountain Time, my time right now. About an hour ago, 5:30 in the morning, while a lot of our traders were still sleeping. Our Theta Ferry for today hit. That trade has been averaging about $1,600 a month per contract. Just a quick note, in the portfolio margin account, we'll be doing 4 contracts on this $300,000. And, it's nice to have a high consistency trade that can start you off with an extra $400 a day in your wallet a lot of times before you even wake up. This has been an absolute game changer for a lot of our members. The gold ladders, solid week last week. We have had 7 weeks of just nothing but profits coming in on the gold ladder. We had to adjust our put spread last week, so we enhanced the trade quite a bit by bringing in almost another $200 in potential credit or income on the trade, but we didn't book a profit yet. So 7 nice weeks in a row of putting actual money in our pocket. Trade looks great, but we didn't really make much off of it last week. The overnight vampire trade, we had a winner once again. We did have to get that win through our portfolio hedging and adjusting. Kind of thought that we would. That's why we did a very, very small trade. I did 1 contract. Johnny One Lot on the overnight vampire trade. This is a trade that we've gone from doing $100,000 in to $50,000 to $25,000. This trade last Thursday, I put $1,000 in it because I knew that it was going to have a very high probability of needing to be hedged or adjusted overnight, and B, I knew that it was going to take a disproportionately large amount of buying power to adjust that trade. And sure enough, it did. I used about $6,000 to adjust that $1,000 trade into the profit zone. But we're up to 4 winners now, 1 loser. And, woulda, coulda, shoulda. A loser is a loser. There's hard way. You can't really justify to your wallet why there's less money in it. But that 1 loser was absolutely our fault. It was we were sitting at a 60% profit on the trade. A 60% capture rate on the trade, and it just wasn't good enough for us. We were too greedy. We let it continue to work, and it ended up costing us. But anyway, lesson learned there. Our oil ladders, fantastic week again. 2 huge weeks in a row. We've really, really needed that. There's very few trades that we do here that have more earnings potential than oil, but it also creates some volatility. And so we do have 4 losers in that category. The last 2 weeks have really helped to get the ROI potential for a yearly basis on our ladder strategy back to where it needs to be. The money cover trade, we did 4 of these last week. We adjusted pretty much every in the money trade that we had to bring in more additional credit. I don't want to say that these trades are set them and forget them. We never worry about them. We never look at them. They just rain money down upon us. But because I don't think any trade is like that, but this is pretty close, and they have been fantastic. And again, from a risk reward perspective, I think it's going to be pretty tough to beat those. I think if you feel like you have a better trade from a not only reward potential, but risk potential as well, I would like to see it, because that's really what the name of the game around here is not just how much can you make. Because if that's all we were looking at, all we would do is zeroed ETEs. Nothing's going to give you better potential in a shorter period of time than a day trade. It's also got a kind of unfavorable, or someone might even say ugly, risk-reward ratio. But the in-the-money cover trade just spend money. Spend absolutely money. Broken wing butterflies, we did not do any this week. I was a little surprised, but again, the premiums just didn't really give us the setups that we needed. we are basically done now with the short portfolio. I'm going to leave this category in here because there's absolutely a good chance that we will come back at some point in this year and build out another short portfolio. But man, this was a great setup for us. And it obviously worked out really well. 32% return in just a couple of months that we were in that portfolio. Very small buying power committed to the trade. Built that in my son's account. That was a nice setup for us. XSP flies. We've been rolling our 0DTE SPY, SPX, and NDX trade. And so we haven't had any profit to put into the fly portfolios yet. We never ever risk a penny of our own money in this. We only put profits from our other trades in that. So we don't risk principal. We only risk profits. Well, we haven't had any in our 0DTEs to put in there this past week. So no additions there. Our trading binary ideas. This has been another very fun area that we've added to the portfolio. We've got 4 trades that we have done right now. 2 of them have been winners. We've got 2 of them that are still working. We're going to add at least 1 more trading idea to that category this week. They've been really fun setups, and you can do those trades with $2 if you want. So again, it's been a fun category to add to our overall mix. Our ATM program, the asymmetric trading method, that's investing. It's passive. It is not trading. We had an amazing 21. We had an amazing 22. I do like the fact that, 21, really solid bull year for the market. 22, pretty much a bad year for the market. We were able to absolutely crush the market in both of those scenarios. 23 this year, we're off to a pretty decent start. The market is up almost 10% year to date. The market's up pretty darn strong right now. We're still beating it, and from a percentage standpoint, we're beating it by about 30-35%. That's a lot percentage wise. So I'm very happy with where we're at. We were much higher than this. We've been as high as almost 16%. We've given about 3% back while the market has come up a little bit. So the market was up almost 8%. We were up almost 16%. Almost double what the market has done. That edge has come together a little bit here over the last few weeks, but we're still very solid in our results. I think most people would be happy to see those results in their passive type portfolios. So anyway, we'll update this chart obviously as we come to the end of May, but we do continue to outperform the marketplace. A couple of things. Here's my sales pitch to you. If you would like to come live trade with us on a daily basis, you can go to try0dteforfree.com. I believe we have the best track record of anyone out there in terms of diversity of what we do in our trade room. And if you really do just are only interested in 0DTEs, I saw over the weekend a YouTube post of a trading room that focuses only on 0DTEs, which I think that's a waste. But they were very excited that they were on track year to date to end up at the end of the year up 80%. And I said, wow, that's fantastic. We're up slightly more than that in the last 6 days, but good for you. I really do think that we have one of the best live trading rooms out there today. So if you want to come check it out, you can go to try0dteforfree.com. We have a double your money back guarantee. We've never needed to honor that. If you go through all of our trainings and you go through your one-on-one setup with me and we look at asset allocation and you do the right trades in the right way, most everybody says, yeah, you're right. This was absolutely amazing. If you want to focus more on investing rather than trading, system that takes 5 minutes a day, and then you shut your laptop, walk away, you're done. You can go to tryatmforfree.com. That's our asymmetric trade management, our asset allocation model. It's passive. It's not trading. If you want to come scalp with us on Tuesdays and Thursdays, there really truly is an opportunity almost every day with our scalping to make $500 to $1,000 a day. It's just up to you and I as traders to extract that, to maximize it. So no guarantees in the marketplace, no guarantees with scalping, but we can look at trade strategies, setups, opportunities, and divine what the potential is. And then again, it's just up to you and I as individuals to see if we can extract that or not. But that's all we can really present to you for trading in the marketplace is potential. So if you'd like to come trade with us there, try scalpingnow.com. It's actually free, basically, if you are a part of our other parts of our program. So scalping's been fun for us. Once again, guys, thank you so much for being a part of my trading community. I appreciate all of your guys' input. I appreciate getting to know a lot of you individually. It means a lot to me. And I do believe what Zig Ziglar says, you can get everything in life if you want, if you just help enough other people get what they want. I hope you guys are getting what you want in life. I hope that your trading is going well for you. Let me know what you guys are looking at trading this week in what I continue to think might be a little bit of a tough environment. Take care, my friends. Talk to you soon.